Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're diving into a topic that's on the minds of many homeowners in Ontario and across Canada: mortgage renewals amidst changing interest rates. It's been 5 years since the Bank of Canada lowered its overnight rate to 0.25% to stimulate the Canadian economy during the COVID-19 pandemic. This move significantly impacted the housing market, as millions of Canadians took out mortgages and purchased homes, capitalizing on the low rates. However, those days of low rates are behind us, at least for now. According to a recent survey by Royal LePage, conducted by Hill and Knowlton, approximately 1.2 million homeowners are set to renew their mortgages this year. Of these, a substantial 85% initially took out their mortgages when the bank's key lending rate was at or below 1%. The survey reveals that 57% of respondents expect their monthly payments to increase upon renewal, with 35% anticipating a slight increase and 22% expecting a significant rise. Interestingly, 25% of respondents believe their monthly payment will remain relatively stable, staying the same or within $100 of their current payment. Meanwhile, 15% are optimistic about a decrease in payments upon renewal. Phil Sauper, President and CEO of Royal LePage, highlights that many Canadians have managed to avoid the worst-case scenario of having to sell their homes due to solid employment trends and declining interest rates. Nevertheless, some homeowners will face a significant rise in mortgage costs, which could put pressure on their household finances. For those expecting an increase in their payments, 81% foresee it being a financial strain, with 47% predicting a slight strain and 34% a significant one. In response, many Canadians are considering various strategies to manage their budgets. 60% of respondents say they will cut back on discretionary spending, 43% plan to reduce travel, and 36% are looking at cutting savings or investments. Some are even considering reducing spending on essentials or finding additional sources of income. Despite these challenges, Canadians continue to prioritize home ownership and paying down their mortgages, even if it means sacrificing other expenses. Soper notes that delinquency rates in Canada remain extremely low compared to other advanced economies. For instance, the mortgage default rate in the United States is more than 15 times higher than in Canada, where the rate rose to 0.2% in the third quarter of 2024, but remains below pre-pandemic levels. Looking ahead, with so many homeowners set to renew their mortgages at higher rates in 2025, many are already preparing to tighten their budgets. Some are redirecting funds from savings or vacations to ensure they can meet their mortgage obligations. While a majority of respondents do not plan to make major lifestyle changes, a notable percentage are considering relocating to more affordable regions, downsizing, or renting out a portion of their home to subsidize expenses. The survey also indicates a shift in mortgage preferences. 66% of respondents renewing their mortgages this year plan to opt for a fixed-rate loan, down from 75% previously holding fixed-rate mortgages. Meanwhile, 29% are considering variable-rate loans, up from 24%. This shift is influenced by recent rate cuts by the Bank of Canada, which has reduced its overnight lending rate by 200 basis points since last summer. The Bank of Canada has signaled a shift in its policy priorities, indicating a focus on economic growth over inflation control due to rising trade tensions. This could lead to more aggressive rate cuts if necessary to protect the Canadian economy from an unprecedented trade dispute. While a trade war with the United States offers little economic benefit, it might present an opportunity for new homebuyers and those renewing mortgages this year to benefit from lower borrowing rates. The next scheduled rate announcement from the Bank of Canada is on March 12th, and many are watching closely to see how these developments will unfold. As always, we'll continue to keep you updated with the latest insights and information to help you navigate the ever-changing landscape of the Ontario mortgage and real estate market. Today, we turn our attention to the upcoming provincial election in Ontario, which is set to take place this Thursday. The Ontario Real Estate Association, commonly referred to as OREA, has released a report card evaluating the housing platforms of the major political parties in the province. This evaluation is done in the context of OREA's A Home for Everyone 2025 plan, which aims to address pressing housing issues in Ontario. The Progressive Conservative Party of Ontario, or the PC Party, has proposed encouraging modular housing by creating housing innovation guides. These guides are designed to help consumers navigate the building processes and financing options. OREA sees this as a positive step, aligning with its own recommendations to promote and scale innovative housing development approaches. On the other hand, the Ontario New Democratic Party, or the NDP, has put forward a series of proposals aimed at significantly increasing the supply of affordable homes. This includes legalizing fourplexes and increasing density around transit hubs. The NDP also supports eliminating the auctioneer exemption and restoring in-person hearings at the Landlord and Tenant Board, while establishing a framework for innovative co-ownership options for multiplexes. The Ontario Liberal Party has focused on reducing costs associated with homeownership. Their platform includes ending development charges on new housing units that are under 3,000 square feet. Additionally, they're proposing to eliminate the provincial land transfer tax for first-time homebuyers, seniors downsizing, and nonprofit home builders. These proposals align with OREA's recommendation to lower the cost of home ownership. Meanwhile, the Green Party of Ontario has committed to an ambitious plan of building 2 million new homes over the next decade. This plan includes legalizing fourplexes as of right across Ontario, which aligns with OREA's call to end exclusionary zoning by allowing up to 4 units per single-family lot, as of right province-wide. OREA President Rick Kedzior has emphasized the importance of electing leaders who are committed to helping Ontarians achieve the dream of home ownership and obtain more affordable housing. He points out that it's crucial to break down the barriers that prevent people from finding a great place to call home. According to Kedzior, this election is pivotal for the future of housing in Ontario. As the election approaches, it's clear that the housing policies of these parties will play a significant role in shaping Ontario's future housing landscape. We encourage our listeners to stay informed and consider how these proposals might impact their own housing opportunities and challenges. Now, let's turn our attention to a significant upcoming event in the housing sector. The federal government is set to make an important housing announcement in Toronto. This announcement is scheduled for tomorrow and is expected to address key issues within the housing market. The media advisory issued by the government hints at the potential introduction of new policies or initiatives aimed at improving housing affordability and availability. While the specifics of the announcement remain under wraps, there's speculation that it might involve federal funding or partnerships with provincial and municipal governments to tackle housing shortages. As we know, housing affordability has been a pressing issue for many Canadians, particularly in major urban centers like Toronto. The federal government has previously committed to addressing these challenges, and tomorrow's announcement could be a continuation of those efforts. It's worth noting that any new measures introduced by the government will likely have significant implications for the real estate market. Potential changes could impact everything from housing supply and demand to mortgage rates and financing options. We'll be keeping a close eye on the announcement, and we'll provide you with a detailed analysis in our next episode. It's crucial to stay informed about these developments, as they can affect both current homeowners and prospective buyers. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time, and stay informed with the latest industry insights.